Inflation is a very serious subject. You can argue it's the way democracies die. When democracy dies in Latin America, inflation is a big part of it. So it's a huge danger once you've got a populace that learns it can vote itself money. If you overdo it too much, you ruin your civilization a lot. And so, of course, it's a big, long-range danger. If you look at the Roman Republic, even after they went to an empire with an absolute ruler, they inflated the currency steadily for hundreds of years. And eventually, the whole damn Roman Empire collapsed.
In the context of modern economics, inflation remains a huge long-term danger, perhaps second only to the threat of nuclear war. We can see historical evidence of this danger in the example of Germany during the Weimar Republic, where hyperinflation completely destroyed the savings of the middle class, paving the way for Hitler's rise to power. Similarly, the combination of inflation and the Great Depression led to the election of a demagogue who plunged the world into World War II. Today, many modern nations are printing unprecedented amounts of money, and we are entering uncharted territory in terms of the size and scale of this practice. When Paul Volcker raised the prime rate to 20% in the 1970s, it led to a painful recession that lasted for years. It is essential that we take inflation seriously and take action to prevent it from spiraling out of control. Modern nations like Japan, the United States, and Europe are printing money on an unprecedented scale, and this could eventually lead to terrible consequences. The troubles that lie ahead are likely to be different from those in the past, and a Volcker-style recession may not be sufficient to tackle them. The troubles could be worse and harder to fix. There is a risk of demagogues exploiting inflation to gain power, and this is not a new concept. Plato accurately described this phenomenon in ancient Greece, and it has occurred repeatedly in Latin America. It is critical to avoid this scenario, as it could lead to the loss of democracy. While there are many uncertainties, one thing is clear: inflation has to be managed carefully. Legislators may be tempted to print more money, but this is seductive and ultimately leads to overuse. When investing in stocks or real estate, it is essential to understand that there will be periods of both booms and busts, and the key is to keep going and do as well as you can. Despite the challenges, there are positive trends to look forward to, such as the growth of advanced technical civilizations with the increasing use of robots in factories. However, this progress also creates adjustment problems, such as the displacement of ununionized jobs with robots. While there are no clear solutions, it's essential to remain vigilant and mindful of the potential consequences of inflation. If you're faced with a situation where a company like Kodak invents something that renders your product obsolete, then you've got a tough problem on your hands. Unfortunately, many people try to solve this problem by simply giving up and accepting defeat. However, this is not always the best solution, as it can lead to a host of other problems such as mounting debt. Moreover, there is a quick and easy solution that is favored by politicians and the Federal Reserve alike, and that is to print more money to address temporary problems. While this may provide short-term relief, it can have dire long-term consequences. We only need to look at Germany during the Weimar Republic, where they kept printing money until the whole thing blew up, and this contributed to the rise of Hitler.
So all this stuff is dangerous and serious, and we don't want to have a bunch of politicians just doing whatever is easy on the theory that it didn't hurt us last time, so we can double it and do it one more time, and then we double it again and so forth. We know what happens on that everlasting doubling. You will have a very different government if you keep doing that enough. You're flirting with danger somewhere, unless there's some discipline in the process. But I don't regard Japan as in some terrible danger. They've done a huge amount of this and gotten by with it. I don't think we'll be as good at handling our problems as Japan is. In my whole adult life, I've never hoarded cash waiting for better conditions. I've just invested in the best thing I could find, and I don't think I'm going to change now. Now, Berkshire has excess cash, quite a bit of excess cash, but it's not doing that because it thinks it knows how to time investments. You just can't find anything it can stand buying. So we don't have a solution to your problem. We're just coping with it as I've described. The reason we're not buying this, we can't buy anything at prices we're willing to pay. It's just that simple. Other people are bidding the price up. And a lot of the buying is not by people who really plan to own them. A lot of it is fee-driven buying. Private equity buys things so they can have more fees by having more things under management. Of course, it's a lot easier to buy something you use somebody else's money. We're using our own money, or at least that's the way we think of it. The shareholders who are worried about the future because it looks complicated and difficult and they're hazard, of course, in a modern democracy in the age of Keynes, you're going to get big government reaction. The reaction this time was bigger than it's ever been before in the history of the United States. They just threw money at the problem. And they were probably right to fear what was going to happen and to be quite liberal in throwing money at it, but they probably overdid it a little. They threw so much money so fast that it's hard for the restaurants to get people to do the work. But I don't criticize it. It's hard to make these decisions under pressure. Well, you have to be optimistic about the competency of our technical civilization. But there again, it's an interesting thing. If you take the last 100 years, 1922 to 2022, most of modernity came in that 100 years. And in the previous 100 years, that got another big chunk of modernity. And before that, things were pretty much the same for the previous thousands of years. Life was pretty brutal and short and limited and what have you. No printing press, no air conditioning, no modern medicine, no. I don't think we're going to get things that were in what I call the real human needs. In the United States, the principal problem of the poor people is they're too fat. That is a very different place from what happened in the past. They were on the edge of starving. And what happens is, it's really interesting, is with all this enormous increase in living standards and freedom and diminishment of racial inequities and all the huge progress that has come, people are less happy about the state of affairs than they were when things were way tougher. And that has a very simple explanation. The world is not driven by greed, it's driven by envy. And the fact that everybody's 5 times better off than they used to be, they take it for granted. All they think about is somebody else having more now, and it's not fair that he should have it and they don't.
What's the best advice you have for individual investors to optimally deal with the negative impact of inflation other than owning quality equities?
Well, it may be that you have to choose the least bad of a bunch of options. That frequently happens in human decision making. And the Mungers have Berkshire stock, Costco stock, Chinese stocks through Lilu, a little bit of Daily Journal stock, and a bunch of apartment houses. Do I think that's perfect? No. Do I think it's okay? Yes. I think the great lesson from the Mungers is you don't need all this damn diversification. You're lucky if you've got 4 good assets. I think the finance professors sell the idea that perfect diversification is professional investment. If you're trying to do better than average, you're lucky if you have 4 things to buy. And to ask for 20 is really asking for egg in your beer. It's very few people have enough brains to get 20 good investments. Most of my schooling was in the Great Depression, but that means I'm one of the very few people that's still alive who deeply remembers the Great Depression. And that's been very helpful to me. It was so extreme that people like you have just no idea what the hell it was like. It was really, there was just nobody had any money. The rich people didn't have any money. People would come and beg for a meal at the door, and we had a hobo jungle not very far from my grandfather's house. And I was safer in that hobo jungle in the depths of the 30s when people were starving practically than I am walking around my own neighborhood now in Los Angeles at night. The world has changed on that. You'd think the crime would be less, but crime was pretty low in those days. So at any rate, I had a very unusual bunch of experience to go through civilization in various phases, including the greatest recession. Well, I say it's one of the greatest recessions in 600 years in the English-speaking world. It was really something, and it was very interesting to watch, and also to watch it fixed. It was fixed by the accidental Keynesianism of World War II. Very interesting. And Hitler had fixed the Great Depression in Germany by the deliberate Keynesianism, but he wasn't doing it to stimulate the economy. He wanted to get even with all the people he hated, but he borrowed all this money and created all these armaments. And Hitler's Germany by 1939 was the strongest economic power in Europe, and nobody else was close. And you wouldn't understand that as well as I do if you hadn't lived through it. You just could see the place gaining traction. More and more and more and more, and pretty soon it was fixed. And in those days, there were all kinds of people, most of my family, they believed in hard money based on gold and not much welfare and so on and so on. So that I was raised among fairly backward people by modern standards. But they were backward in kind of a self-reliant way that I think was helpful. I've never regretted that I wasn't raised in a more liberal establishment. I had a liberal aunt. She was my mother's cousin, but she was the second lady dean at the University of Chicago. And she'd done her thesis on the conditions in the coal mines. And of course she was a screaming leftist. I would be a screaming leftist if I observed the way the coal miners of yesteryear were treated. You couldn't be a human being with any decency in you without feeling that it was deeply improper to have the misery that great and have it manipulated for the benefit of the mine owners and so forth. But she sent me all these left-wing books, one every Christmas, and I always thought she was a little nuts. Which shows that if sometimes the very vivid extreme evidence misleads you on the deeper reality, you've got to be a guard on that, against that all your life. In fact, the whole trick in life is to get so that your own brain doesn't mislead you. And I have found that just a lifelong fun game. And I can't remember a time I wasn't doing it. I was not a prodigy or anything like that, but I was a prodigy in having adult interests. I was interested in what worked and what didn't and why. And I could see that very eminent people that I loved and revered were nuts in some ways, and I would decide, well, I certainly like Dr. Davis, but he's a little nutty in one way, and I'm not going to be like that. And so I was very judgmental, and I think that helped me.
Like and subscribe if you like this video. Also, click on the tiny bell icon if you'd like to see more videos like this in the future.